Good morning and welcome to the DecisionPoint trading room. Good to be back after the holiday last week. And here we go on a new market day. All right, so a few housekeeping information. Carl is not going to be with us today. It's just me. He's taking another day off, and a much deserved one, of course. Let's see. So Q&A box is where you're going to put your symbol requests for me and your questions. The chat room is for you. And I do believe my moderator is here. So if you go in and say hello, tell him where you're from. It's always a good time to get in there and get into the room and talk and see what other people are thinking about the market right now. There's always an interesting discussion. Particularly on Fridays. Fridays, I do a trading room, but it's only for our DecisionPoint Diamonds members only. And I have a lot of fun with that room. It's about an hour and a half, but the chat room gets really busy in the Friday trading room. So some of them are here, and I'm sure they'll keep the chat going for you. All right, so what else am I going to talk about today? So I thought today what I would do is go over the timing entries and exits. I talk about it all the time in the trading rooms. We usually come right up to the 5-minute candlestick chart and immediately start going. So I don't always have a chance to talk about my entry rules and rules for entries and exits. So I'm going to talk about that today and give you a better understanding of how I do that. We will do your symbol requests to finish off the program, but I will be going through the market, letting you know what's going on currently with our indicators. We will also go through a sector review. We'll look at what sectors are doing well, which ones are not. Most of the sectors are doing pretty well right now. And we'll get an idea of whether we think the market's going to continue higher from here or whether we're going to experience a downtrend. All right, I think that covers all of the housekeeping. So let me go ahead and share my screen. Let's go ahead and let's look at the market first. And then I think I'll go through those timing the entries and exits right before we do our symbol requests. That will make the flow work a bit better. So if you're watching this on YouTube, you should be able to, there should be a way for you to scroll forward to check out my rules for entries and exits. But let's go ahead and start right off the bat here with our SPY chart. So as you can see, the market is down slightly right now. I'm not seeing much in the way of anything to tell me that we're in for a big decline. The only thing that tells me that we are in for, at a minimum, a pause right now is this overbought RSI, but it's barely overbought. It could certainly accommodate more upside. It's just typically once we've had these kind of overbought conditions for some time, we get that little bit of pause or whatever, and then we start to see a decline out of those overbought conditions. So while I think that that's probably what's going to happen again here, I don't want to make any too many sweeping conclusions because we've been waiting for a pause. We got a little bit of a pause back here, if you call one day of decline a pause. And then we were off to the races again. Looks like with the holiday trading, I mean, we didn't do a whole lot. And at this point, I don't think we're going to do a whole lot. There's some economic reports, I believe, that are coming out this week that could make things a little bit interesting. But in general, people are feeling pretty good about the market. And seasonality-wise, December tends to be a good month. So we're getting close to that Santa area in the holiday trading. Certainly retail had a big sales this week, and according to what we're hearing, they went really well. The consumer is not dead yet. So we could see some higher prices here as we move forward. But my sense is that we will get a bit of a pause, possibly a pullback. I don't know that it'll be too painful at this point, but I would expect a little bit of a pullback here. If nothing else, we're going to continue to see sideways consolidation. Let's look at the 1-year daily. I have stochastics on the 1-year daily. And as you can see, we have stochastics sitting well above 90 and really have been above 90 for some time. This indicator I don't use as overbought and oversold. I look at this as we want things to be, if you want to call it overbought. We want to see stochastics staying above 80, and they can do that for some time. And that is usually when you're in the midst of a nice run. So here you can see stochastics were above 80 for most of this period. That's when it was mostly rising. You can see back here, and we ended up with some rising prices there. So the key is keeping stochastics above 80. And at this point, they look very strong. And look at the VIX. The VIX is just moving way up on our inverted scale. We flip our VIX so that we can have overbought on the top. And you can see the VIX is definitely what we would call overbought right now. People are very complacent. At this point, it's a matter of something is going to shake up the market news-wise. And like I said, we'll have to pay attention to any of these upcoming economic reports this week that could shake things up just a little bit. But for now, everything looks like it wants to just keep running forward the way it normally does. Let's look at our indicators here. All right, we have been noting these negative divergences, and this one could actually, these could be fixed up a little bit here because they are still intact. We still have negative divergences on our short-term indicators. That's not a good sign. That tells us that this can't run forever, which we already knew it can't run forever, but this also tells us that we really should see a bit of a decline here after this almost straight up rally that we've just experienced. And these negative divergences could be hinting at that coming forward to the forefront. And the IT indicators are doing just great. The ITBM and ITVM are rising nicely. They are getting overbought, which is a bit of a concern. And again, when these indicators get overbought, we generally see some sort of decline, or in this case, we saw some chop and churn sideways. But typically, you're going to leave these conditions and you're going to experience a decline. So they're getting overbought, guys. So we have to keep our eyes open and peeled and ready for possible decline. All right, that covers the major market. Let's go ahead and start looking at some of the other areas that we cover. I'm going to take a sip of coffee, though, so enjoy the Bitcoin chart while I take my sip of coffee. Before I get too far into the program, though, I do want to share something with you. We are currently running a Black Friday to Cyber Monday sale. So today is the last day of our sale. If you buy 1 month of any of our subscriptions, you will get 2 months free. If you are watching this and it happens to be past Cyber Monday, send me an email at support@decisionpoint.com. Send me an email, support@decisionpoint.com. And if the sale isn't too stale, I'll go ahead and offer you those free 2 months if you want to go ahead and subscribe. So if you're watching this and it is past Cyber Monday, don't fear, send me an email, support@decisionpoint.com, and you can get those 2 free months. And for those of you who are watching today and are in the room, go ahead and get over there and buy 1 month and you will get 2 free. This is the best sale we've ever run and probably the best sale we will run. It'll probably be a typical annual thing, but take advantage of this now because we're not going to be doing 2 months free probably until next year again. All right. Got to get the commercial in here somewhere. Okay. Bitcoin. Bitcoin has been on a nice, I wouldn't say gentle rally, but it's been on a nice, gently rising trend, if nothing else. And what's been going on with the PMO? The PMO has been in decline. A lot of this is due to the fact that this rising trend is somewhat stable. It's not really changing much. It's just moving higher. That will oftentimes change the momentum look, because if you're keeping the same rising trend the whole way up, you're not showing any new momentum. And so that's when you'll see the PMO sort of flatten out. And that's what's going on here with Bitcoin. It doesn't look weak. I've been looking for weakness here out of Bitcoin since we got that PMO sell signal. And all we've gotten is a lot of chop, but ultimately the rising trend is staying intact. Stochastics have turned down, which I don't like, but they've been very indecisive. So I can't really make too many, can't count on it to necessarily be giving me a good signal here. But the RSI has been positive. I think Bitcoin is going to continue rising here. The OBV is showing interest here as we're getting more and more volume coming in. I think Bitcoin is looking pretty good to get above 38,000. But right now, that does seem to be the sticking point. And until we see that PMO turn back up, I'm not going to be looking for a big forceful rally. At this point, I'm going to expect that that rising trend will continue and we will drift back up above 38,000. Using the word drift and Bitcoin, it doesn't seem to go hand in hand. It is kind of volatile, so do keep that in mind. UUP, so the dollar is definitely showing some weakness, possibly on declining interest rates. We had a dark cross come through on Friday. As you can see, the 20-day EMA dropped beneath the 50. So the dollar is showing a lot of weakness here. And so we suspect that it's going to continue down and test the 200-day EMA. This was a pretty strong and steady rally. And now it's slowly unwinding with this kind of rounded top here, rounding off and heading back down. So I don't see anything here to look for a upside reversal. Even stochastics have topped beneath 20. I think we're going to be looking at the dollar falling even longer. And if the dollar is going to fall, that should be good for gold. And I would say that, yes, that will be good for gold. Gold is also, if you look down here, showing relative strength against the dollar. What we do here to get that relative strength is we compare gold to the opposite of what the dollar did, because gold should go down as much as the dollar goes up. If the dollar goes down 25, 1%, if the dollar goes down 1%, the relationship suggests that we should have gold go up 1%. But sometimes gold will go up more than that, or it will go down more than it should. And that's where we get the comparison of relative strength to the dollar. That's why we compare it to the negative UUP. But as you can see, gold is showing internal strength. And we do have discounts fairly low, which means investors are bullish on gold. We're expecting gold to break out here and continue higher. Gold miners. Gold miners should continue to benefit from rising gold prices. And as you can see, we're having a nice little rally here. Notice that 20 and 50-day EMA is beginning to change and cross above its 50-day EMA. That gives us a silver cross when we have a 20, 50-day positive crossover. And that's looking pretty good right now. You can see that the RSI is positive, so that's good. Everything looks really good for gold miners. We have excellent participation under the surface, or under the hood, as we like to say. So you can see a high percentage of stocks above their 20, 50, and even above their 200. It's above 50%, which is our bullish threshold. Stochastics above 80. I would be looking for a breakout here for gold miners. I think they're going to make another run up here to 33.5. I think that it has a really good chance of getting to that level. And more than likely, it will be fueled by rising gold prices. Quick peek at silver. Silver is also having a nice rally here. It's rallying almost vertically, not quite the same as with gold, but certainly rallying. We have a golden cross that's setting up here with the 50 crossing above the 200-day EMA. and a nice breakout. Does look like we're going to head towards those highs that we saw back in May for silver. And I would expect a breakout there if things are going to continue to look good for materials and metals in general. Let's look at USO. Crude oil is still acting fishy is the best description I can give it. You know, people have been, since back here when the Israeli-Hamas war started, we saw that big jump in crude oil. And people have been expecting a rally in crude oil for weeks and weeks and months, it seems like. Lots of people talking about it's kind of the Teflon trade, you know, that you, no matter what we did, it was going to be a good trade for crude oil. I don't see that. It's still not acting the way it should. This is an excellent area for a reversal. And I was starting to see a lot of exploration and production, integrated oil and gas stocks, all come up through my diamond PMO scans. And it suggested to me that something might be going on under the surface, that maybe this was the time for the reversal, but it's just not picking up yet for crude oil. Now, the energy positions, we'll look at energy a little more closely shortly. Energy itself maybe is ready to rally against crude oil, but generally it travels where crude oil is going to travel. And crude oil is just still indecisive at best. I would still, at this point, I'm going to go out on the limb and say that we are going to get a reversal off this low. But it might take a little bit more time chopping around here in this trading range before it makes that breakout to the upside. But ultimately, with demand picking up for the holidays, the consumer seems to not be too worried about spending money at this point, which I still haven't figured out. But I would imagine that travel is going to be, we'll see a lot of travel, and I think that will pick up demand here. So at this point, long story short, I do think that this could be the reversal point for crude oil. But I think it might take some time before we get that move to the upside as demand builds over the holidays. TLT, let's actually look at the 10-year yield first so we can get a sense of what's happening with yields. The 10-year yield did bounce off gap support here, but I am expecting it to break down. This is a pretty heavy-duty head and shoulders. Here's your head, there's your left shoulder and your right shoulder. The neckline goes across these two lows. And technically back here last week, it did break below that declining neckline. It is a neckline that slopes downward, but it is trying to come back up and out of the pattern. I still am of the belief that we're going to see interest rates move even lower from here. I'm looking at 4.1% for the 10-year yield right now. I would be looking at bond funds right now. I think that they do look pretty good. But this is such a bearish formation here. I just have to believe we're going to see rates continue lower here. The PMO certainly is in agreement. So that brings us back to bonds. And as I said, I think bond funds look pretty good right now. We have a silver cross that is coming in on TLT with the 20 crossing above the 50. And it looks pretty good for a breakout coming up here on TLT. Stochastics are above 80. They did kind of tip over, which, you know, might be indicative of a little bit of trouble that we might have beneath this overhead resistance here. But ultimately, I am expecting a breakout here. So right now, I would say that I am positive on bonds and negative on bearish on yields currently. All right, so that covers the major markets. That leaves us some time to look at the sectors. Here we have all the sectors. I'm going to take another sip of coffee. What I want you to concentrate on while I do that is the PMO on all of these sectors. And that's going to give us some pretty interesting information, I would say. I think there's one sector that definitely has something that we need to dive into. For me, energy looks most interesting. It's new momentum, a new PMO crossover buy signal coming in. Something's going on with energy. I just don't know what it is, but this really, the momentum, considering what we're seeing with the chop around here on energy, this new momentum, there's something going on here. And that's why I'm thinking crude oil might be on its way back up after a little bit more volatile chop sideways. But ultimately, when I see this PMO on the energy sector, it does definitely perk my ears up, if you will. Healthcare, we have a PMO that's just now reaching positive territory. It is pulling back pretty heavily, though, toward the 200-day EMA. Not an unusual thing to see. One of the things to note, and it looks like it's pretty much the case for all of these, but we had the initial breakaway gap, continuation gap on most of these. Breakaway, that actually had a breakaway, continuation gap. And you're going to see that on a lot of these where we got the breakaway gap and then price angling back up. So even though we got the big pop, we're not seeing price angling down on a lot of these sectors. They're still angling up. XLF looks like it's finally topping. It had really a super strong rally, and regional banks led a lot of that. All right, so under the surface, where do we really need to look? I think consumer discretionary is going to be interesting moving forward with the information we're getting out of the retail sector. That could be interesting. Energy, like I said, I think is definitely worth a peek under the hood. And I would say past that, let's see, real estate trying to break out of its little cluster going on there. Technology really overbought, but doing extraordinarily well. I think I would be interested in looking under the hood at technology just to see if the participation suggests that we can keep things moving in this direction. So let's plan a look at discretionary, energy, and technology. I want to go to my other chart list, though. That's why I'm making that. So consumer discretionary, we'll start there. Nice silver cross buy signal. You can see that came in back there. This is where I'm really interested, is all of the participation indicators. This is really where the secret sauce is on DecisionPoint charts. We're looking at how many stocks have price above their 20, 50, and 200. And then we have our Silver Cross Index and our Golden Cross Index. The Silver Cross Index, basically a silver cross, circled right here, is when a 20 crosses above the 50. So the Silver Cross Index basically looks at all the stocks in XLY and determines how many of them have a silver cross or have a 20 above the 50. And right now, that's almost 50% of them. That's a really good number to see. The best number is over 50%, but we're almost there on the Silver Cross Index. And you can see the Golden Cross Index is making its way up. The Golden Cross Index is very similar to the Silver Cross Index. A Golden Cross is a 50, 200-day EMA positive crossover. So basically, we're taking all of the stocks in XLY and determining if they have a Golden Cross. And that's what the Golden Cross Index gives you. And as you can see, rising and looking very strong here for consumer discretionary. I would be looking for more upside coming out of discretionary. There's certainly enough participation. I'm a little nervous about overbought conditions on percent stocks above their 20, but we know that they can hold those overbought conditions for some time if it's in a nice little rally move, which of course we are currently in. Okay, so let's now go peeking into, I know we want to look at energy, but there was one other. Oh yeah, technology. Probably should take a peek at materials, but we'll see how much kind of time we have. At this point, what we're seeing in technology is very overbought conditions. Certainly could see more stocks above their 200-day EMA. I think it's interesting that this is flattened out. So there are some good stocks in here, but there are some sickly stocks, and they're still not coming back to life yet because we're not getting those prices above the 200-day EMA. And considering it's in technology, which hasn't been below its 200-day EMA for some time, I would expect most of the stocks would look similarly, but we have a little bit of a problem here. But still, 2/3 have price above their 200-day. And you can see the Golden Cross Index rising. It's not overbought. Silver Cross Index rising, and it's not overbought either. So technology certainly has more ground it could cover to the upside, because really the internals are still very strong for technology. The internals are strong across the board for the market right now. Here's a quick peek at materials. I like the breakout. I like the rising trend that we're continuing to see. And look at the participation coming in here. Numbers very similar to what we're seeing even in technology. A little nerve-wracking here. Well, nerve-wracking. It's a little bit of a nervous condition here where we're getting the Silver Cross Index flattening out, possibly to turn down. But given the strong numbers here of stocks above their 20 and 50-day EMAs, that's not going to turn down. It's going to continue back up. These percentages are much, much higher. And as long as price is above a 50 and a 20 and 50-day EMA, those EMAs are going to rise. So we should see the Silver Cross expand in materials. I like the way materials look. And now energy, the head scratcher. A lot of volatility here, moving sideways. Could be 1, 2, 3 triple bottom. No, because price is coming down. So maybe 1, 2, 3 triple top. Really, it's just a very volatile trading range that it is in right now. PMO has given us a new buy signal, but I'm noticing it's already kind of flattening out a little bit here. I think we may have been sucked in here on that PMO, and it's already thinking about turning back down. So I would continue to be very careful with your energy positions. I know that I put, I think, at least 2 out there last week for Diamond subscribers. I would be very careful with those. I had to go with the scans. The scans were producing. And I have to say, the look here at this energy chart, I'm not that excited. The participation numbers are pretty low. Notice the percentage for the Silver Cross Index is the same as the percentage of stocks above their 20 and 50. So we're not seeing any new momentum here. We're not seeing much in the way of new participation in this area. And that is a little bit worrisome. Because it's equal to the Silver Cross Index, that means the only place the Silver Cross Index can go is down, because if these numbers go down, that means this is going to end up going down, because the only thing holding it up are those few stocks that are above their 20 and their 50-day EMAs. So, energy, really a great place for a reversal here, but crude oil still acting fishy. And I have to say that PMO, even though we got that new buy signal, is already looking kind of iffy on today's 1% plus decline. So be careful with your energy positions. I think there's something building here, but it may be too early. All right, that covers the market. That covers the sectors. Let's go ahead, and I'm going to talk to you now about timing your entries and exits on a stock chart. I actually have a slide for this. So if you want to take a screenshot, go ahead, and that might help you, but I'll get all of these in here, and then I'll give you a chance to take a screenshot. So entries and exits are done on a 5-minute candlestick chart. So that's number one. You want to use a 5-minute candlestick. And what you need on the candlestick is a PMO and an RSI. That's the key elements. You can add the OBV like I do. If you want to get my chart style for my 5-minute candlestick chart, just send me an email, Erin at DecisionPoint. And if you are a StockCharts member, you can get that chart style and then you'll be able to use it. But if you don't have that, you can set up your own on whatever charting program you like. The PMO, I do believe, is on Thinkorswim and on some other charting platforms. So let's talk about entries. So a conservative entry on a 5-minute chart is when you get a PMO positive crossover and you get a positive RSI. So when those two things happen, that's your conservative entry. That's kind of your starting point. This is what we're looking for. This is the best setup, is a positive PMO crossover with a positive RSI. Generally, that's going to get you in at a good spot. Now, as with the PMO and the RSI on a regular daily chart, sometimes by waiting for those crossovers and those positive RSIs, you might miss part of the move to the upside. So there are aggressive entries, and aggressive entries are just kind of the gray area of getting to a conservative entry. But let's talk about sell points. Your sell point is really easy. The sell point is any time that 5-minute PMO turns down. So you get the 5-minute PMO turning down, that's when you want to push the sell button. Now, let me reiterate, this 5-minute candlestick chart is only for use to get your entries and exits. Now, if you're a day trader, of course, you can use whatever minute chart you wish. So, but in typical traders, short-term trader, you're using a 5-minute candlestick only for entries and exits. So that's my key point. Like I said, this is what we're shooting for, is a positive PMO crossover and a positive RSI. Sometimes you don't get that. You have to kind of go in with that gray area. Well, the RSI isn't positive, but the PMO did cross over. Or the RSI is positive, the PMO is rising, but it's not crossed over. There's another gray area for you. But ultimately, this is what you're looking for. Aggressive entries, as I was just saying, are going to be based on your price patterns and your PMO and RSI reactions. This, unfortunately, the gray area is going to take practice. This is where you just start doing this enough. You're going to start seeing those price patterns. You're going to start seeing how the PMO and RSI react to price, and you'll be able to make a more aggressive entry if you wish. So here's a 5-minute candlestick chart. This will give you an idea of what we're looking for. So here is your entry point right here. You have a PMO crossover on the 5-minute, and you have a positive RSI that came in right there, which puts your buy point right here. So yes, you've missed a little bit of this rise, but you really came in at a point where things are clicking. That's why it's a conservative entry. And generally, when that finishes, you're going to get some follow through to the upside. Now, the exits are timed when the PMO turns over. Now, you could have used an exit back here if you wished, and that would have gotten you out down here. But if you had waited and come here closer to where we ended up with that sell signal, you would have ended up with a little bit better of an exit. But don't beat yourself up if you got caught on this turn, because you're still getting a pretty nice move even as a day trade. But this is really why I use the entries and exits on the 5-minute PMO. I think that it works very well for giving you kind of that initial win, if you will, rather than just blindly hitting the buy button or blindly hitting the sell button. This gives you that little bit of an edge that could give you that extra 0.25% or 0.5% just on the day, based on when you purchase and when you exit a stock. All right, so now that we know those rules of engagement, I think it is time for us to go ahead and look at your symbol requests. I don't have Carl with me today to walk me through them, so I will be looking for questions, and then I will go into the symbol requests. We'll see. We have Happy Thanksgiving, Adrian. Appreciate your Thanksgiving wish from Canada. Good to have you here. We've got lots of symbol requests. Hopefully I can get to all of them. Does your subscription include your chart settings for the main charts you show in the webinars? Stephanie, you can get all of the charts we show in the webinars plus some on our website. If you go to our blogs and links page, which is what I'm on here, you have access to these chart lists. So here's the DPA one. This is the chart list that shows you, actually, this isn't the DPA. This is the under the hood charts. So you can see we have them for the small caps. We have them for the major indexes here. And then, of course, we have it for all of the sectors, which we'll get to coming here soon. There we go. So you have access to all these charts already built and with the annotations. So that's where you can get those charts. And they are available on our website to our subscribers. Here's the DP alert, which was what I went over when we started. Now, I will tell you these chart lists update at the end of the market day. So as you notice, all of these are showing November 24th. So you're going to get the updated charts after the close, because when we get these numbers for the under the hood indicators, most of those don't actually post until about 2:30. So we do a 3:30 or 3:30. We do a 1:30. Let's see, 1:30, which is 4:30 Eastern. We do an update, and then we do another update at 7 p.m. Eastern, so that you'll have the most up-to-date charts. So if you want the live versions, that's a whole nother story with StockCharts, and you can copy from our blogs and set up your own that way. But like I said, they're all available to you already annotated and ready to go on our website. And again, for those of you maybe who came into the room late, we are still running our Black Friday Cyber Monday special. If you buy 1 month of any subscription, we will give you 2 months free of that subscription. So all you have to do is go ahead and subscribe. The 2 months will be added to your account after the subscription has been posted. And there you are. My dad is taking the day off. Nothing wrong with him. He just needed some time. So that's the answer to that question. How many days on the 5-minute chart? I believe I do a 2-day, it looks like. Yes, 2 days. But you could obviously add whatever amount of days you want to a 5-minute chart. But really, I'm just looking at what action's happening right now. So I don't really need a whole lot of history, but it could use, you could use more history on the chart, and that could give you a way to kind of look at where the prior entries and exits might have been on a 5-minute chart. Okay, so Stephanie, if you wanted to, get some of these charts into your own account, you have to, when you're in the blog, if you click on the chart, it'll bring it up on your desktop there. You're not going to be able to save any of the annotations, but you should be able to save the chart the way that it is. I don't know that for sure. Like I said, they're on our website for certain, and they always have their annotations on our website. But certainly these indicators are available on StockCharts for you to get to. You just have to build the chart yourself. And very soon, I'm going to be releasing my scan alert service. We're still waiting on some of the technical issues in the background to be worked out. But pretty soon you're going to be able to buy our scan alert service, where all of the scans I run for my DecisionPoint Diamonds reports, you'll get all the raw data from those scans. So you'll get the list. You can go through the list yourself. Diamonds, I'll go through the list for you and pick out those stocks that I like on the Diamonds reports. But the scan alert service should hopefully be launching soon, and that will offer you another way to get DecisionPoint into your life. All right, let's get to some of these symbol requests. I can just tell you right now, looking at it, I'm not going to be able to get to all of them. 15-minute delay. So is it not too late? Okay, so if you use StockCharts for a day trade, but StockCharts does 15-minute delay quotes. I don't know what their delay is. I think you can get real time without the delay. I'm not positive. You have to ask StockCharts about it. But yeah, you're going to have the delay. So, you're doing the best you can with what you have. And typically you're going to still end up in a better place by using the 5-minute chart. But I hear you. You've got that delay to deal with. So does everybody else. Yeah, to save charts with annotations, they used to let you save them when you copied a chart, but I've not been able to make it work for a while. My commentary is equally important to my charts. Yes, it is. All right, so let's get to it. SoFi. All right. Trading range bound. This does look like a falling wedge. Where is it? No, this is a declining trend channel, maybe here. Yeah, or it's broadening, but I would go with the declining trend channel. So that's a little bit of a problem. It's in the financial area, and I will admit, I think this was a prior diamond, just never really got itself going, and the PMO is running really flat because the decline is very steady. The PMO is certainly turned up. Stochastics have turned up. I think that it is lined up well to go and at least test the top of this declining trend channel. But notice that death cross of the 50 and 200. I think you've got a bearish bias going on in this chart. And while I think near term, you're probably going to see some upside here off SoFi, I think that considering how well the financial sector has been doing, this one has been underperforming its group, and it has been underperforming the market in general. So if I owned it, I think you have a little bit of, you might be able to eke out a little bit more gain here before you sell, but I'm not a big fan of this chart. And if it were still on my diamond list, which I don't think it is anymore. I think it dropped off. On diamonds, I give the picks. We track them for a month and then they fall off the list. I don't do a model portfolio. We just sort of see how they do as we move forward. And this one I would probably turn off. I don't think I'd want to have it. So I'm not going to go to the 5-minute. I guess I can go to the 5-minute and we can look at where we'd sell it. So the sell point already came in. So certainly you wouldn't want to be selling now. You still have an opportunity maybe for a little bit of a return here on the upside. But if I came to this chart and I was ready to sell the stock, I might just go ahead and sell it because the PMO is still in decline and the RSI is negative. So there's not a lot of upside potential here on this 5-minute chart for SoFi. The sell point, the best sell point is past, but I think we're still at a sell point. Weight Watchers. I have not looked at this chart in forever. It had a really nice move back here out of the lows, and then it kind of consolidated that big rally, managed to get itself back up a little bit more, but really fell back to earth here and just really hasn't been doing a whole lot. It's incredibly depressed right now as it's been moving lower, but I do see kind of a rounded bottom coming together here. And we do have a PMO getting ready to be on the buy signal. I know the upside potential on this is probably huge because it's a low price stock. And even if it got up here to this level of resistance, that's a 30% gain. So I can see why you're interested in this one. I think that you've got a lot of profiteers probably coming in thinking the way you are as far as this being a turn. I think this is a highly risky investment. because your downside, your stop level would need to be set down here, and that's a 14% stop level. So if you wanted to go in on this and try to get some of that incredible upside potential, you certainly could, but just know that your risk and your stop level are going to be really deep. So you need to go in comfortable with the idea of losing over 10% on this investment if it doesn't do what you want it to do. Let's see the weekly. Yeah, the weekly chart does not look good either. So that tells me that there's some issues here. But if it's something you were interested in, sell point right now, not a buy point. Looks like it's going to move further down. So I would not be a buyer just yet. I would be waiting for that PMO to get to at least come down and start to decelerate, if nothing else. But at this point, I don't know you're going to get a good buy point. I think your entry may have passed. Obviously, this was your last entry back in here. Again, you can see how these charts can work out very well for you. Problem is, of course, generally when you come to the chart, it's not just lined up. It's a waiting game. You're going to have to play the waiting game. But if you're trading and you're in front of the screen, like most of us are, you guys are in a trading room. If you have time and you can just keep this on another screen and just come and check back on it, back and forth, you'll eventually get a good buy or sell point, but maybe you'll have to wait another day. Snow. Technology. This one looks really nice on the breakout. It's not quite broken out yet, actually, but it's really, really close. PMO is doing what we want. Stochastics are above 80. It's been outperforming its group. I didn't talk about what's on my chart. This is the industry group compared to the S&P, and the group you can see has been outperforming. This is the stock to the S&P, and you can see while it's been outperforming somewhat here, it is starting to outperform again. It's been kind of even right here on participation, but that's okay. The SPY's been doing well. And you can see against its group, it's been trading pretty much in line with its group, which is fine because the group is doing well. What we often say is that 50%, half of your stock's price movement is attributed to the sector and the industry group it is in. So it's pretty important to know how the industry group is doing before you hop in. Relative strength is not going to prevent me necessarily from getting into a stock, but it definitely sets the stage. So I know how tight maybe I want my stop. Maybe I want a tighter stop because relative strength isn't cooperating in the way I want, but I like the stock chart. And I think that we might have some higher prices. Those are some of the things you can think about. But I like this chart. Just looks like a lot of the move may have been accomplished, and now it's going to be ready for a little bit of sideways trading movement. But ultimately, I would expect it to move higher based on these positive indicators. The weekly chart looks very healthy. We've got the PMO, weekly PMO on a crossover buy signal. Scooter's not above 70, the StockCharts technical rank. I like to see it above 70. You can look up what the StockCharts technical rank does, but ultimately it tells you what how good the stock looks in the intermediate to long term based on trend and condition. And we want to have it above 70. Typically, that's a good place for it to be. You can see it was back here. That was during that nice rally. So we want to see it stay above 70, but at this point, we don't see that just yet. But still, that PMO buy signal positive RSI on the weekly chart looks good. Entry and exits. Last exit back here near the top. The last buy point actually came in here at the top of this little decline. And the PMO is headed back down, but we haven't lost a whole lot of ground here. It's still trading positive. I'd still want to wait around just to see if it's going to hold this support level. If it doesn't, look for this support level and watch the PMO. We want to see the PMO start turning up before we enter. I don't see this as a really good entry just yet. Oh my gosh, I did not get to a lot of symbol requests. This is why we have to have Carl in the room, because then I don't talk too long. CVX. Yeah, this looks a little bit weird, like the crude oil chart. Like I said, PMO on the buy signal. There are things going on under the surface that tell me that I should expect a rally coming in here. This really tells me that momentum is building, even though we're moving sideways. And so I have to say it would be a hold for me. I think you could maybe take a chance on it, but with that negative RSI, I mean, this isn't the kind of chart I necessarily go to buy a stock. But the PMO's rising, and that's good. Stochastic's kind of rising and in positive territory. Look at the outperformance against the group. The group is not doing well, but Chevron does tend to outperform the group, or at least it has been. So if you're going to go for a stock here, this is probably a good one to go with. But you can see, even though it's outperformed its group, it's still really struggling against the S&P. I think that there's potential here, mainly because of what's going on with the PMO. But, you know, the PMO is fallible. It will point things out and reverse on us. But I like the way this is looking. It just does have the feel of it's ready to break back out. The weekly looking pretty healthy here as far as being on support levels. Yeah, it's still a little iffy, but because there is support down here, the stronger level of support is further down. So there is some risk here that if it doesn't hold this little cluster here that we're at, that it could fall further. Let's see what that downside risk looks like. Oh, it's about 7% downside risk right now. So that's a perfect place to set your stop if you wanted to give this one a try. 5-minute chart. PMO is turning down, definitely not a buy point. All right, let's look at XRT. This is the retail ETF. Nice rounded bottom. RSI positive. PMO is still rising. Stochastics above 80. We're getting good news out of the retail sector over the sale. I think you have some good upside potential here on retail. But what I want to do is look under the hood, because I happen to have an under the hood chart for retail. So it's still stuck beneath overhead resistance. We have really good participation. I was not expecting this kind of participation. So I like it. I think XRT has some upside potential, kind of outperforming, not greatly. So, you know, you could probably find a stock or an ETF that maybe is outperforming a little bit better. But ultimately, let's see, Golden Cross still below its signal line. But we have a pretty decent amount of participation to get things moving in the right direction. Certainly, Silver Cross Index is rising, so that looks good. So I like XRT. 5-minute, not a buy point. We're still in the decline on the PMO. I think you can do better than where we're at right now. We didn't look at the weekly, but the weekly chart is showing a crossover buy signal right now on the PMO. So scooter in the hot zone. I think retail looks pretty good. And I think we have another minute or two. Let's do this one. Super micro. I know this one's been at the top of the scooter reports for a while, but been in a trading range. I would have expected to see a better look out of it, considering the technology chart is like from here going straight up, and we're not seeing that on this one. It could be better. I mean, it's got the rising trend. I think that the market's ready to pause and technology is going to be a part of that, but well, the PMO is accelerating higher. Stochastics don't look great. I don't think that this is one that I would be looking to enter just because it hasn't been outperforming the S&P like it could be. You can see right here at how it's performed against the S&P, and it did have this period of time where it outperformed, but in general, it's performing in line. I don't know. I might want something that's performing a little bit better than this one, but ultimately, it doesn't look too bad. Let's look at the weekly chart real quick. See, the weekly chart doesn't look particularly healthy. I mean, we do have that scooter. Like I said, it's been at the top of the hot zone. So it does imply that we should get higher prices. But this PMO is a bit worrisome for me. And you can see that trading range that it's been in, it looks ready to go down to the bottom of the range. So I'd be really careful with this one. I don't know that I would be a buyer here just because it's not performing as well as the others. All right. We're about done. I'm going to, again, give you my ad for my Cyber Monday special here. Buy 1 month, get 2 free, and no coupon code necessary. Just subscribe, and you'll get 2 free months of whatever subscription you buy into. These are for new subscriptions only. If you do happen to be a DecisionPoint member and you want to add a report that you don't have and get those 2 months free, send me an email, support@decisionpoint.com, and we can work that out. That's all I've got for you today. I want to thank you for coming into the DecisionPoint trading room. I hope you enjoyed my presentation on rules for entries and exits. And at this point, we will see you again next week. I believe Carl will be back as we start a new month of December. I did want to let everybody know, join our free email list. I'm getting ready to do a presentation on the silver and golden cross indexes, the best participation indicators ever. And I'm going to be doing that presentation coming up, I believe, on Wednesday or Thursday. You'll get the information. I'm getting ready to send it out if you're on my free email list. So just go to the DecisionPoint homepage, sign up for the free email list, and you'll get the information anytime I do these free presentations, give you a chance to learn more about DecisionPoint that way. All right, that's all I have for you today. See you next week. Good luck and good trading.